Imagine waking up to find that the engine of global trade, a machine worth well over $30 trillion, no longer runs exclusively on the US dollar. This isn't some far-off what-if. It's a reality China is building right now. And it's not just about the trade disputes you see on the news. This is a quiet, calculated move to build an alternative to America's single greatest source of power. And it's happening faster than most people realize. Forget the headlines about tariffs, that's mostly noise. The real story, the one that will shape the next century, is happening deep in the plumbing of the financial system. It's a systemic pivot, a monetary shift led by Beijing, designed not necessarily to dethrone the dollar, but to build a parallel system that they control. Think of it as a financial earthquake in slow motion, and the tremors are already here. The problem, a systemic pivot. For more than 50 years, the world has operated on a single currency, the US dollar. It's the foundation of global trade, the bedrock of finance, and the source of America's so-called exorbitant privilege. This privilege means the US can buy things from around the world in its own currency, borrow money more cheaply and critically, use financial sanctions as a weapon. The dollar isn't just money, it's a tool of power. And that's precisely why China is building an alternative. This wasn't a decision made overnight. It's a strategy decades in the making, designed to insulate China from American economic pressure and project its own influence. The final push really came after events like the 2008 financial crisis and the freezing of Russia's currency reserves, which laid bare the risks of relying on a system controlled by a rival. Beijing's strategy is methodical. They're encouraging partners to trade in the Chinese yuan. As of early 2025, for the first time ever, more than half of China's own cross-border transactions were reportedly settled in yuan. That's a massive jump from just a small fraction a decade ago. This shift is being turbocharged by new infrastructure. China built its own cross-border interbank payment system, or CIPS, as an alternative to the US-dominated SWIFT network. CIPS already links over 1,400 financial institutions in more than 100 countries, creating a parallel financial highway that can bypass the dollar entirely. This isn't just about making the yuan more popular, it's about creating a separate ecosystem, one that China controls and one that's far less vulnerable to American sanctions. This move is already reshaping global alliances, creating a world where countries can choose to pivot toward Beijing's orbit to avoid US oversight. The stakes, a multi-trillion-dollar fault line. To get a sense of what's at stake, you have to look at the numbers. The global trade market is a machine worth well over $30 trillion. The US dollar is on one side of nearly 90% of all foreign exchange trades, and is used to invoice between 40% and 50% of all global trade. This dominance is what underpins America's global standing. It's what helps fund its military and allows the government to run massive deficits without immediate collapse. So what happens if that dominance continues to erode? If demand for the dollar slackens, its value could fall. For everyday Americans, that means the cost of imported goods, from phones to cars to groceries, would climb. Interest rates would have to rise to attract investment, making mortgages and loans more expensive. The US government would find it harder to finance its debt, potentially forcing tough choices between cutting spending and raising taxes. But the economic fallout is only half the picture. The real power of the dollar is geopolitical. It gives the United States the ability to lock entire nations out of the global financial system. When America imposes sanctions, it's using the dollar's dominance to enforce its will. As more trade moves into the yuan and systems like CIPS, the bite of those sanctions weakens. This isn't a distant problem. The dollar's share of global foreign exchange reserves has already slipped to around 58%, a low not seen in over 2 decades. Central banks are diversifying, hedging their bets against a future where the dollar isn't the only king of the hill. We're witnessing the slow fracturing of the global financial system into competing blocks, a trend that could define the rest of this century. The evidence, the trail is everywhere. The proof of this strategic shift is everywhere, if you know where to look. It's in a series of events that seem disconnected, but when pieced together, paint a very clear picture. First, look at what China is selling. For years, Beijing was one of America's biggest bankers, holding huge amounts of US Treasury bonds. That's changing. Since 2022, China's holdings have stayed below the 1 trillion mark. By May of 2025, its holdings had reportedly fallen to just 756.3 billion. As Alicia Garcia Herrero, chief economist at Natixis, has pointed out, China has been slowly but steadily selling US Treasuries, which is a warning to the US. But even more important is what other countries are doing. A growing list of nations is now settling major trades with China directly in Yuan. Russia and China already conduct over 90% of their business in rubles and yuan. And they're not alone. Brazil is using local currencies for trade. Key oil producers like Saudi Arabia and the UAE are now in the expanded BRICS group and are openly talking about selling oil priced in yuan. Argentina even used a currency swap with China to pay its debts. These aren't small economies, they are major players deliberately choosing to use a non-dollar system. This is all made possible by that new financial architecture. While everyone was watching the trade war, China was building. Its CIPS system is growing, and now Beijing is pushing the next frontier, a digital yuan. A central bank digital currency could make cross-border payments nearly instant, slashing costs and, most importantly, making systems like SWIFT less relevant for those who adopt it. Finally, this whole strategy gets a massive boost from the BRICS alliance. Now including major energy producers and emerging economies, BRICS represents about 45% of the world's population and is actively creating a framework for a multipolar world. They're developing their own payment systems and have made using national currencies a core goal. This isn't just China's project anymore, it's a global movement with real momentum. The implication, a fractured world order. So, what does all this mean for the future? The era of unquestioned American economic supremacy is changing. We are likely heading toward a more fragmented world, one with at least two major financial systems operating side by side, a dollar block and a yuan block. For global companies, this means navigating a much trickier landscape. Supply chains could get tangled as countries feel pressure to pick a financial side. The straightforward math of global business will be replaced by a geopolitical chessboard, where your currency choice is also a political statement. For the United States, the implications are profound. The erosion of the dollar's status means a weakening of the exorbitant privilege. It could signal a future with higher inflation, steeper interest rates, and tighter government budgets. America's ability to project power through sanctions will be reduced, forcing a major rethink of its foreign policy. This transition is already happening. The dollar's share of global reserves is at a multi-decade low, while central banks, especially in the BRICS countries, are buying up gold as an alternative. In fact, recent surveys show a strong majority of central banks plan to keep increasing their gold reserves. The US dollar index even saw a steep decline in the first half of 2025, a drop accelerated by trade tensions. This isn't a drill. It's a fundamental recalibration of the global economy. If you want to stay ahead of these world-altering financial shifts and understand the deeper forces shaping our economy, make sure you subscribe and hit that notification bell. I'm curious what you think. Drop a comment below. Is this the dawn of a new multipolar currency world, or are reports of the dollar's demise greatly exaggerated? The story of China building an alternative to the US dollar is no longer a fringe theory. It's a documented reality unfolding right now. This isn't about one tariff or a single trade dispute. It's about a fundamental rewiring of global finance. For decades, the world played a game where America made the rules and owned the board. Now, China is setting up its own table, with its own rules and its own currency. The shift is gradual, but the direction of travel is unmistakable. The cracks in the foundation of dollar dominance are becoming impossible to ignore. We are moving from a unipolar financial world to a multipolar one, and the consequences will be felt for generations. The signs are here, and ignoring them is a luxury no one can afford.